People often ask me, when is a VA loan the best type of mortgage to get if you're VA eligible versus other mortgage types? VA loan is certainly not the only mortgage out there. In many cases, the VA loan is the best option, but it's not always. And so I'm going to run through some quick scenarios on when to get a VA loan and when another loan might be more appropriate. First one is if you're putting less than 20% down. If you're doing a low down payment, well, VA loan is zero down, but you can put a down payment down. Some people do. Or you can do 3% conventional or 3.5% FHA, all those kind of programs. But the advantage of VA is one, the rates are lower. Two, there's no mortgage insurance. And even though there is a funding fee, it, because the rates are lower, more than makes up for that. So less than 20% down, VA is going to win that pretty much every time. Again, because there's no mortgage insurance and because the rates are better. Next type. If you're collecting VA disability, you don't have a funding fee due ever. And in that case, VA is a no-brainer. You just got to go VA on that because you are going to save money. So VA is the winner on that one. Next one is if you're doing more than 20% down, but you're not VA eligible for the disability. This is where it gets really interesting. And on that one, I'm going to say it really depends because it's very, very close and here's why. The VA loan does have a lower rate than conventional does, but if you're putting more than 20% down, you still have that funding fee if you're not eligible for VA disabilities, I'm trying to say. But if you're putting more than 20% down, you would not have the PMI that you have on conventional. So those two kind of negate each other, and it's very, very close. It really depends on the lender. And in those scenarios, I'll actually price both out to really see because I want to make sure that you get the best deal. So again, that one is it depends. Next scenario, low credit score. VA loan is extremely flexible credit score requirements. There actually is no minimum score in VA. There are lender guidelines. That one's pretty easy. Go VA on that one every single time. Next scenario, high debt to income ratio. Same thing. VA is much more lenient on debt ratios. Actually, no debt ratio maximum, although lenders do have their debt ratio rules. Again, VA is going to be the way to go on that. That's not even a question on that one. Here's a really interesting one. Cannabis industry. If you work in the cannabis industry, what you need to know is that VA actually doesn't allow cannabis income. So you would either go conventional if you are an employee or non-QM, like these portfolio products, if you are an owner of the business. So that's one instance where you would not go VA. Here's another interesting one. It's a veteran buying with a non-veteran, and you're not married to them. So like your girlfriend or boyfriend, mom and dad, whoever it is, they're your co-borrower on the loan. You're not married to them. And in those cases, I usually recommend to go conventional or FHA. And here's the reason. The VA home loan, when you do a joint loan like that, the down payment is not zero down. It's actually 12.5% down plus the funding fees. So you're a little bit over 14% down payment. And FHA and conventional don't have these rules where they designate being married or not married. The down payment rules are the same. And so you can still get away with doing 3.5% on conventional or FHA, even if you're not married. So in those particular cases, it might make sense to go conventional or FHA. We're trying to stay low on the down payment. What if you're maxed out entitlement? Now, the VA home loan, you can actually, there is no limit on entitlement if you're only buying one particular house and you don't have a VA loan now and you're got all your entitlement. But if you already have a house and you're trying to buy a new house, you might max out that entitlement. And in that particular case, it just depends. Like how far over are you? There is a rule where if you go over entitlement, there's a down payment due of 25% of the difference. Again, I mean the difference of how much you're over on entitlement. Now, is that 3% of the loan, 5% of the loan? It just depends. And so that's why I put that one. I say it depends. And ask your loan officer to do that calculation for you. Next one, renovation loan. And I'm separating small and large projects, and I'll tell you why. The VA reno product is very, very particular in the type of renovations you can do. There is a rule where the house has to be inhabitable. It's not really a VA guideline, but everybody has the same guideline where the house has to be inhabitable at the time of closing. In other words, you can't buy these boarded up junk houses on VA. You can't do these structural things either. So in that particular case, the VA loan is a good fit for a smaller project. If you're doing renovation, a renovation loan is where you do the purchase and the renovation all in one loan. So, like, say you're changing carpets, getting a new roof, getting a water heater, like that type of stuff. Like, or maybe the stuff works now, but it's out of date. Maybe the kitchen looks ugly from 1973, like that type of thing, where the house is inhabitable, but it's just not perfect. Those types of scenarios, then that VA renovation product makes a lot of sense. Now, if we're talking major projects, that's a little bit different. In those particular cases, the 203K program would be the better option. And here's why. On those major projects, you can do pretty much anything on 203K. You can have houses was missing a wall, missing the roof. I did one where the house literally had major fire damage. And they actually, it was a veteran that called me, and I just flipped into 203K because it had so much major damage that we could not do VA on it. But they made a lot of money on it. Like we did, it was about 100,000 renovation. The repaired value was at least 100 over what they did. So they did pretty well with the house, but it was just a major renovation. And the other cool thing about the 203K program is you can actually defer payments too. So if you got that, massive renovation where you have to wait 6 months to move into the house, 203K actually allows you to do deferred payments, which is really cool. You still pay interest on it, but you don't make payments. So you're not paying for the house under construction while you have your other house where you're living in while the house is being built. You're not stuck with double payments. And the FHA program does allow that. So those are some tips about when the VA loan makes sense and when it might make more sense to go with another mortgage type. As always, if you have any questions about VA loans or anything in particular, feel free to give me a call. My number is 937-572-3713 or scopeher.com. Talk to you soon. Bye.